soon as we got Fed announcement, the market dropped. We saw a small bounce, but ultimately we sold off very aggressively, mainly when it came to how Jerome Powell was asked about the future. And specifically, one thing that he said, adding that he would like the central bank to see more progress in its fight against inflation. And the one thing too, even though we did get the pause like everyone expected, they want to raise rates one more time this year. When we see that type of hawkish tone, it's definitely not good. We're gonna take a look at Tesla, the S&P 500, if I still think that we can hit all-time highs, and if not, what my plans are to hedge against my long-term positions or to make some money in the short term. My name is Peter DiCarlo. I've been trading full-time for the past 8 years. I have a trading community with over 12,000 members and a Discord community below. All of our trading resources are completely free. Big thing today was the Federal Reserve's decision for rate hikes. We saw CPI come out last week. As everybody was expecting, the Fed held interest rates steady while also indicating that it's expecting one more hike before the end of the year and fewer cuts than previously indicated going into next year. This is a much more hawkish tone than many people had expected, especially the fact that they're looking at fewer cuts going into next year. Along with rate projections, the Fed also sharply revised its economic growth expectations for this year, with gross domestic product now expected to rise 2.1%. In addition to holding rates at relatively high levels, the Fed is continuing to reduce its bond holdings, a process that has cut the central bank balance sheet by some $815 billion since June of 2022. We've watched this channel before. In the beginning of this month, we were watching the seasonality chart for Tesla. Even though I am a Tesla bull, we were being objective and saying that September and October are some of the worst months historically to be invested in Tesla stock. With the Fed having a pretty hawkish tone today, moving up into all-time highs and having it seem weaker and weaker over the past couple of weeks, the fact that September and October are not the strongest months, I wouldn't be surprised if we end up pulling back another 10%. I still want you to understand that we are still in this recent uptrend and we are still holding the key levels that we've been talking about before. A bounce here could most certainly happen, but if Tesla comes down and breaks 250, I believe that we will easily see the pullback to 210 and maybe even $200. As we talked about earlier this week, a pullback of 10% on the S&P 500 or a continued 10% pullback on Tesla wouldn't be that wild, simply because of how much we have ran in the past 9 months. It's easier to see here on the 1-hour chart that every time we have been coming down to this support line, we've been moving ourselves higher and higher. And I do believe now that the chances of us pushing through $300 is definitely a lot lower. My plan for now is to hold my long-term shares that I currently have. Once Tesla pulls back down to $255, I will end up entering calls for December. This will be my attempt at a very big speculation play to the upside. If Tesla from there breaks $250 and holds under $250 for multiple sessions, I will cut my loss, simply because there will be so little volume that a drop all the way back down to 210 will occur just as fast as it did before and just as quickly as it recovered before, because there's so little volume on the volume profile. Once the snap is confirmed, that is where I plan to hedge out my long-term position. Right now, I have 400 shares of Tesla. This means that I would have a delta of 400. If I wanted to hedge that position entirely, I would have to purchase a negative 400 delta worth of put options. And if you want me to give you guys an in-depth video talking about exactly how to hedge and the methods that I use, comment down below. But once the break occurs, I will put a hedge in place, probably a very strong hedge all the way down to 200, begin to pull that hedge off as we move down to my target, and I will not add any more long-term shares unless Tesla breaks $200, which I do not believe will happen. The S&P 500 looks even worse. We have a symmetrical triangle that is currently set up here, which is normally a continuation pattern. We have a lot of volume sitting between $450 and $440. You can see that today we broke and closed all the way down at low of session underneath this trend line support. Now, I've seen in my time these types of trades play out where market makers will slam a stock through a support, everyone gets triggered out, they buy it up the next day. But if we close tomorrow below 440, we are definitely in some deep shit. There is no volume from 440 all the way down to 415. And I do believe that we could see for the rest of the month a 5% sell-off on the S&P 500 if we continue to close underneath this support level. Hope that this video helped, guys. Thanks for all the support. If you want to trade alongside of us every single day, go check out our Discord community. The link's in the description. You can also follow my Twitter account. Today, we ended up closing a solid profit on Tesla, and I share all my trades over there for free. Thank you guys for all the support. I'll see you next time. Peace.